Welcome to the Moonshot Podcast, the podcast where we explore business growth, inspire innovative marketing strategies, and explore the world of company culture. Now here are your hosts, serial entrepreneurs and best-selling authors, James Philip Arbuckle and Kane Carpenter.
How busy have the reservations been for some of your favorite restaurants?
Down here, we've been able to walk in basically anywhere we wanted to recently. It's been pretty stark.
For the last, even 2 years, in Detroit anyways, two of my favorite places, you need to book a week out, but 5-6 days, weekend, maybe a week out, or they would fill up, unless you wanted that 4 o'clock, dinner time where basically everyone over the age of 65 comes and eats. It was tough sometimes to get into the good places, and I've noticed maybe before Halloween, both of my favorite places, I jump on Open Table or at Resi or Talk or whatever, and you see the whole grid of times open. And I'm like, well, that's unusual. Usually a certain 5 to 7 sold out, or this is 1 or 2 days before going, and it's what time do you want? It's literally wide open. That's maybe people are on vacation, and have you seen it more? Is it every time, Kane?
Yeah, the last maybe week or so has been a little bit heavier because I imagine it's the holiday parties and things for companies and stuff. But I think you're right. Between about Halloween and about before a week ago, it was just it could get anywhere.
So yeah, and this week obviously holiday party is a big thing. Everyone's getting together. But for me, I was asking because it wasn't just a one-time thing where I go, okay, maybe it's a holiday weekend and kids are out of school on a Friday and everyone's gone. And what I noticed was it was every week. And I'm thinking, okay, so they keep talking about credit card debts at this high, auto loan defaults are at a 30-year high. I just saw something that credit defaults are up 100%. In the last 2 years, which from what I understand, they're still not high, they're just up. And you can, the crazy wage gains are stopping, and interest rates are up, so credit card payments are going up. Inflation, everything's just expensive, right? I'm thinking, okay, where's the money if we're not going out to the nice restaurants? And I don't know if you notice around here, when things were booming, the drive-through windows seem slow. Even Starbucks, used to be wrapped around to the corner, and then now I can just pull in. But now, McDonald's, it seems busy again. Do you think there was a shift from, okay, I have some money, but I don't have enough money to do it all? So are we trading some of that entertainment dollar to, say, go buy Christmas presents in your mind?
I would agree with. It always kind of shocks me the way people project out the end of the year or right. So the way I would look at the way spending works over the course of a year is when you look at my own spending. It's like at the beginning of the year, Q1, say it's typically slow because I've overspent in Q4. The summer is the summer, but Q3 is the mystery one for me because when you look at analysts and stuff, it's always like, oh, Q3's down. But if you were looking at the kind of the natural way that I would look at it over the course, Q3 should be down because we're anticipating Q4 to be a time where we spend a lot. So I kind of forgot your question, James, but that's the way I look at the year.
The idea that we're just trading right now because if money is tight, we're not gonna go out for the $250 dinner, and
yes,
that money's gonna go to Macy's, right? It's
correct. Yeah, that's right.
And maybe that's only for I know I just got in a conversation with a financial advisor, and I give my opinion to people I know. If you had money or some kind of wealth, when I say wealth, not rich, just you had some money. In 2019, most of those people are significantly wealthier since then. There's the stock market boom, the wages are up. If you owned assets, right, with the inflation, your assets went up, and it was a terrible time to not own anything. But if you own stuff and you had investments, even up to now, I mean, the Dow's at a new record or something. I don't know. You are wealthier. And then I'm saying, like, maybe that's the top 20% of, you know, of wealth. They all got much wealthier in the last 2 to 3 years. So I feel like part of them are kind of carrying the economy to an extent, but you know, that bottom 80% is probably really starting to feel that pinch. You see the Affirm, like the off the book buy now, pay later stuff, that was up 50% or something crazy. I'm making up a number. Credit card debt's at this high, and it's like for that 80%, it's, you know, maybe we're not going to take that trip, or maybe we're not going to go out to dinner on Friday night or do date night. It's, you know, Christmas is coming up and we got to buy all this stuff. And I'm just trying, like, the restaurants were definitely slower at a time when I feel like October kind of starts what I call eating season. This is when people start going out, eating out more and drinking more, and you get into the holiday season and it really gets going. I don't think I've really seen it get going until about this week, though.
Oh, interesting.
And even then, I feel some of the restaurants you can still walk into that used to, you know, it's sold out. So, you know, looking at that, you know, and, you know, back to your planning, it's okay. Well, I'll come back to that. The Q3 is a mystery, right? You think it should be down, but they revised it to like GDP was like 5.4%. Like it was better than,
Right.
you know, maybe not spending, but something happened in Q3 this year that was an outlier. And then I think Black Friday wasn't too bad, but if you factor in inflation, I don't know, adjusted, if that was really, we might have spent more, but I don't know if we got a lot of value for that when you look at the cost of things. So we're going to go into December. We're going to max out everything and max out buy now, pay later, run our credit cards up. The interest rates are high. Even if they start cutting rates in Q1, they're not going to cut them enough to make the credit cards come down impactful. The only hope you probably have is what? That's you get your tax rebate, right? Well, some people. That usually gives a little bit of life, if assuming you get some money back. And if you're looking at Q1 right now, thinking, man, if we're already trading like entertainment money for shopping, and we're going to rack up more bills, how bad do you think the restaurants are going to feel it in Q1?
Yeah, great question. That's a really good question.
You know, I'm invested in restaurants and bars, and I personally feel that things are going to be slow. If things get really bad, sometimes the bars do better because people get depressed and they drink more, which is a great thing and the general idea. But I could see where the restaurants are going to take a little bit of a hit, and maybe retail too, right? You got to spend basically Q1 kind of trying to dig out of the hole from Q4, and if your disposable income's that light, you don't really have a choice, right?
It's true.
What do you think Q2 looks like?
It's really dependent on where we are in the economy at that point. Like, I think if Q1 is slow, Q2 might look better. Because, like, to your point, it might give people some time to pay stuff down. But I'm not sure. What do you think?
I need to see what the effect of the school loan repayments are going to have.
Oh, interesting. Yeah.
Like they're starting to kick in, and now, right? It's December.
Yeah.
That's they originally said September, and then it kind of now that morphed into December. You know, unfortunately, some of the conversations I had are people that I was trying to give not advice to, but maybe some insights into managing their money. You know, even this whole time, I'm like, just keep paying on it, and just they did the pause and interest. Like, this is the time to. It's the same like the concept of make a payment on your mortgage every 2 weeks or something. That idea of trying to pay down your home in 15 years instead of 30. And I'm like, yeah, now's not the time to buy the jet ski, man. Knock your school loans out. This is the time. Just keep sending the money. And then, you know, most people didn't do that. And the people I'm talking to are thinking, you know, they were really betting on the loan getting wiped out or something happening, and I'm like, you know, the day is coming, my man. Like, maybe you get a reduction on something, but if you think your 100,000 is just going to get evaporated, it's probably not going to happen. And what is the payment on that? $800 a month, $1,000 a month? I don't know. I don't have school loans. But the problem is they went out and the money that they needed to service their school loan debt, they bought the bigger house and then they got the nicer car. And I'm not sure they're going to have the disposable income. They might be able to make that payment for the school loan now. They didn't leave themselves much room. And
Right.
then now what's left over? So there's things that there's some cracks out there with the debt. Okay, it's one thing if you have wiggle room, right? I don't know if most people's credit cards right now have 60% available credit. I have to imagine things are starting to get tight, and I think that's when the trouble happens. Will that happen? I don't know, but you're gonna need to reduce your costs or get more income so you can start paying down your debt. Otherwise, it's gonna choke the life out of you, and now we're gonna throw the school loan payments on top of that. Maybe it doesn't hurt January, but maybe over that $1,000 a month over the next 5 months. Well, by the time you get to May, it just sucked $5,000 more dollars out of your life. So maybe Q2 is, I don't know. I'm not hoping for it, but I'm just not convinced the worst of it's gone until we have a quarter of two of pain.
Yeah.
And I don't want the pain,
Yeah,
but
sorry.
go ahead.
You were saying off, in the other conversation with me, but the food costs are down, right, on the restaurant side. Like, do you think that it's going to impact pricing?
I don't know if it's going to come down on pricing side. I think you're starting to see it reflect in earnings. Even on our restaurants, certain aspects, certain types of chicken cuts came down. They were really expensive. Where you want food costs around, whatever 30% or something. It might have been up at 40, 42, but you didn't want to raise prices because it would scare customers away. So I think there's been a lot of and you saw like the shrinkflation in certain places, like everything's gotten smaller. So I don't know if prices are going to change at the restaurant. I don't know if I've ever seen like a combo at McDonald's come down. Maybe they run more deals. Um, but let's just say there's this deflationary period coming because we can't spend. Things should get lower, right? Or maybe the entree price is the same, and now you get an appetizer thrown in. I could see where maybe some stuff like that happens.
I guess I asked that just thinking about Q1, like if it is true that the consumer demand falls, will restaurants have at least a little bit of wiggle room to lower prices to try and drive demand a little bit? Or are
Well,
we just kind of stuck?
the problem is the food cost was, the last 18 months, it was bad, but labor went up a lot too, and I don't know if that's coming down. I mean, short of if we have a hard landing and unemployment ticks up to 5 or 6%, maybe wages come down. But if we're gonna hover around 4% on unemployment, and there's like no slack in the labor market, that the wage inflation's very sticky, and maybe the food cost comes down a tiny bit, and it helps the restaurant a little bit, but the wages are so much gain that
Yeah.
and let's face it, even your rent's not coming down. There's these things that are just kind of fixed costs, and look, it's not getting cheaper to do business. I know that much. So,
Yeah.
and then we're talking about a couple points too on the food cost. I don't know. I could possibly see more deals,
Yeah. That would make sense.
but I went to Panera yesterday, and of course, not the greatest experience. Um, if I get their sandwich, it's literally like, where's the chicken? It's supposed to have pulled chicken on it. I think it's on there somewhere. But that's how little. So I have to order double chicken, which to me is probably close to what the normal chicken used to be. I got a double chicken sandwich and a latte, and it was $20. And it's like, man, $100 a week to get lunch, $400, call it $400 to $500 just to buy lunch if you're eating out. I know there's cheaper ways to eat, Kane. It just, if I get a combo at McDonald's, it's $11.
Yeah, yeah. You're not talking about anything extravagant here, but that's the point, I think.
Have you bought a pizza lately? Or hell, I think I got a pack of like nothing t-shirts, just like undershirts, and I think there were like 3 shirts, it was like $50 or something. I don't know, it was something crazy. And then I'm talking like Nordstrom stuff, Kane. I'm like just a basic ass under like, man, stuff's so expensive.
Yeah.
And the wages have gone up, but they keep saying the wages haven't gone up enough to really match the cost of everything. You said the CPI print wasn't that bad, but it excluded what? Food and something else.
Yeah, it's usually when they do that, they're trying to exclude food and food and housing, because I think those are volatile. I can't remember.
Is there somewhere where there's like both of those? Can I have the like, let's call it the OG CPI print, and then an adjusted one that factors in the dynamic cost of like food and? I'd be curious, like, what does that number look like? Because sometimes when I think, well, inflation was only this, but I look at my grocery bill and I'm like, man, that's not. You're putting up a single digit number. This is double digit inflation on the food side.
Yeah.
But are you gonna whatever? Like commodities, the eggs and stuff went up for a little bit and they came back down. They're still expensive. But do you think a bag of rice is gonna go through a deflationary period?
Yeah, it's just hard to see it.
I occasionally see a deal, right? Kroger will say, "Hey, buy 5 of these for this." Like you might see deals, but I don't know if I just. I like if you will look at like appliances. Have you ever seen appliances just drop? Not usually. You might catch a sale, and you might catch a sale on excess inventory, and just I don't remember seeing like a crazy price drop on durables. Have you seen a brand new Honda Accord? Just the next year's MSRP is like 5% less.
No.
I don't know if I've seen it. I'm sure it's happened. I've just not seen it. So I'm hoping we keep booming. I'm hoping the stock market is like not throwing us a head fake right now. That's concerning. People are pulling money out of their 401ks for emergencies. There's a lot of cracks, and it doesn't mean that it's going to fall apart. Yeah, that you ever see that when they crack the glass on like a stairway, like a railing or something,
Yeah.
and it's just you look at it and it's cracked glass, and you think, oh, it's like it cracks the outer layer of the glass, but it still has its strength. It's is it possible that's the economy where we're going to see cracks, but it's just not going to fall apart? Like I think these are the things everybody's wondering.
Yeah, true.
But I guess we'll see. We'll come back. We'll do another podcast in Q2, and we'll look at what happened to hospitality and retail in Q1. And look, we know it normally slows down anyways. That's historical.
Right.
It's just, will this be a little bit more severe of a pullback on? Ken, I think, would you agree with this, that if you had one thing you could spend money on, it was eating out and entertainment, retail shopping, or travel, which one do you think people are going to spend their money on?
Travel?
Travel. I know you still got to eat out with that part, but if you can't do it all, I feel like people are going to penny pinch, and they're going to take that vacation.
Yeah, right.
And maybe we're not going to eat out on Wednesday and Friday, and I'm going to cut off, maybe going to Starbucks as much, and I'm not going to buy those new shoes and some clothes, and I can't do it all, but if I had to give one up, I'm not giving up that trip. It's, that fear of missing out, the experiences, and maybe travel keeps moving, but I could see where retail and food to an extent takes a little bit of a hit.
Yeah, I could definitely see that.
But, I'm wrong all the time. We're going to find out in 3 months. So, all right. Anything else to close this one out?
No, that was pretty thorough.
All right. Well, we'll be back in April. So. All right. I'll catch you.